Hello and welcome to CMC Markets on Tuesday the 22nd of October and the weekly market update. Now this week I'm going to do a specially extended weekly update with my good friend Megan Greene from Maverick Intelligence, and we're going to take a broad look at what's happened over the last 2 to 3 months, not only in Europe. We may, if we have time, also have a quick look at the UK and the US and have a look ahead to maybe what we can expect going forward into year end. So last time Megan and I were sitting here, which was about 3 months ago I think, we were still on hold I think for the German elections, and Enrico Letta I think had just taken over the reins of the Italian government. It's actually quite surprising to find that nothing much has changed there apart from the fact that Mr. Berlusconi is temporarily out of the picture. But we haven't as yet got a German government. I think the likelihood is we'll get some sort of grand coalition, and I asked the question I think in July, do you think that we will get any sort of change out of Germany post the German election? So I'm going to ask you that question again.
Sure, I think you're right. I think it's overwhelmingly likely that we'll have a grand coalition, and that was always the case. I really think there's very little chance of there being a huge change in direction on Germany's part in its approach to the Eurozone, at least. So in terms of domestic policy, there might be some changes, the introduction of a minimum wage, for example. But insofar as Germany approaches the weaker countries in the Eurozone, I really don't think there will be any change whatsoever. The differences between the CDU, CSU, and the SPD are actually pretty small when you prod any senior politicians on details on things like Eurobonds or debt mutualization. Banking union, they have a few more differences, but at the end of the day, Merkel's still going to be the chancellor and she's still going to be running the show. It will be really interesting to see who gets the finance ministry, whether it's from the CDU, in which case it will probably be Schäuble again. Then we're ensured no policy change. Or perhaps it might go to the SPD. I know they'd certainly like it. But even if it goes to the SPD, I don't think it will have a huge impact.
I was struck by the comments of Wolfgang Schäuble on the 16th of September about a European recovery and that the doomsayers were wrong and that everything was hunky-dory. To be fair to him, we have seen an improvement in some of the economic data, particularly out of Spain, where I think on a couple of occasions the PMIs actually came in above Germany's. But, I think, or do you think, that he's indulging in a massive dose of wishful thinking?
Well, I think he's trying to play, tricks with the confidence fairies, and it's his job to do so. We have definitely seen a lot of better indicators over the past couple of months in the Eurozone, but there are a few that have remained fairly unchanged, and they're still really worrisome. One is, the unemployment levels, which are still extremely high, and there are huge differences still between the core and the periphery on that front. Another is kind of credit in the Eurozone. It's still a completely creditless recovery. Borrowing costs for SMEs in the weaker countries are way higher than in the core countries still. Nothing's been done about that kind of financial fragmentation. The financial crisis hasn't been ended in the Eurozone at all, and until that happens, companies aren't going to invest. So it's hard to see where any kind of domestic demand in the Eurozone is going to come from, which means everyone's still trying to export their way out of this crisis, and that's kind of a global phenomenon at the moment. Unfortunately, everyone can export their way back to robust growth.
Spain is doing that, though. Their exports are up, but I think one of the things I did notice in Spain when I was there a few weeks ago was that unemployment is coming down slowly, but how much of that do you think is seasonal? In terms of the tourist season? Yeah,
I think some of it is seasonal. I think with Spain, the unemployment figures are a little bit deceiving because there's such a massive black market there as well. So actually the headline figures make it look a bit worse than it already was. That being said, at almost 25%, it's extremely high. So even if figures are starting to come down, there's a ways to go, and the labor market in Spain remains extremely rigid. The government has a lot more work to do in terms of opening that up. And if the government doesn't do that, it will be hard for Spain to return to really sustainable growth. And if the government does do that, does decide to make it easier to hire and fire employees, makes it sort of reduces the duality of the labor market in Spain, that will result in higher unemployment in the short term, unfortunately. So either way, the government has a long and difficult road.
And you could probably translate that across to the Italian economy as well, where we've seen pretty much political gridlock for the past 3 months. And Enrico Letta, whichever way he turns, there's an exit door and it's bolted shut.
Yeah, that's right. I mean, the Italian government's managed to push through extremely little, and it's understandable given that Italy has been in the midst of political crisis almost since the start of Letta's term. Unfortunately, that's going to continue being the case going forward. All of the main political parties have huge divisions within them. So the centrists have big divisions. Monti, the head of the centrist party, just quit. The center left has big divisions. The center right has big divisions. There are big fights between Letta and Matteo Renzi for the leadership of the PD.
He's the mayor of Florence, right?
That's right. And so we'll see how that plays out with the PDL. Of course, you've got Berlusconi, who's taken an exit for now, but he's done this many times, and so far he's always come back. So I think it's too early to say he's really gone. And there are huge divisions between his supporters and the more reformist-minded PDL members. So it's hard to see how there's going to be political stability to get anything real done over the next couple of years.
Yeah, I mean, Berlusconi miscalculated, didn't he, when earlier this, I think it was last month, when he tried to bring down the government. But I think obviously it's going to be very difficult for Mr. Letta to push through any reforms. How long do you think that he's got in terms of the duration of his government? Early next year? Can he survive that long?
Yeah, I think his government will survive through this year. I also think it's important for the government to push through electoral reform before there's a new election. Otherwise, if there is an election, we'll have the same exact result, essentially. So
is there appetite for that?
There really isn't much appetite for that, and any party that really triggers an election would be punished at the polls, I think. So I do think that has to be pushed through before an election is held, and I don't see that happening this year. So I think at some point, possibly in the first half of next year, we'll see an election.
You talked about the banking channels earlier, the asset quality review. Now, what's your take on that? I think the date that I've got is that it's going to take until October 2014 for the EBA. Is it the EBA that are going to be doing it?
Well, the ECB and the national supervisors and consultants that they hire will be doing it. And then the EBA is doing the stress tests that sort of feed off of some of the data pulled for the asset quality review.
And this is just the 150 biggest systemically important European banks.
Yeah.
It's not going to solve the problem, is it? Because it's generally not the big banks that are the problem.
Well,
or is it?
Well, no. So that's part of the issue. Is we saw in Spain, for example, how the small banks, the cajas, caused the problem. So it's not comprehensive, but even so, the ECB is going to have difficulty with it, no matter how it plays it. So if the ECB is really stringent with the asset quality review and shows that banks actually have quite a few recapitalization needs, and does finally draw a line under the banking crisis, that would be a positive in the medium term. But immediately it would choke off this very fragile recovery that we're seeing in the Eurozone. So that would be bad.
So you would classify it as a recovery?
Well, it's a stabilization at the very least, and it would go south if they were to come up with a big number for bank recap needs. Also, they don't have a fund at the moment, so it's a little bit unclear. There are state aid rules saying how they'll fill in the gap, but if a bank needs a huge recapitalization or needs to be wound down, there's no real mechanism for that to happen. But if the ECB is really lenient and doesn't find big numbers for some of these banks, no one will take it seriously. It will suffer a huge credibility loss. The banks won't be forced to write down their NPLs, and they're not going to lend until that happens, so we'll continue to have this creditless recovery. So I think the asset quality review is really designed to draw a line under this crisis. I think it will actually cause a few more problems.
And the NPLs are continuing to go up. In Spain, they're actually higher now than they were before the first transfer into the bailout fund. In Italy, they're going up. In Ireland, they're going up. So the problem's not going to get any easier, is it?
Yeah, that's right. I mean, the ECB is really incentivized to figure out what it's inheriting as the single supervisory mechanism, look under the hood at these banks. But unfortunately, I think what we'll probably get instead is a real fudge. So I think these NPLs will continue to go up.
Okay. Let's move on to the smaller European countries, Greece, Portugal and Ireland, each with their own problems. Greece, funding gap for 2014, 2015. Now the IMF has been at great pains to say that they will not contribute any further funds until they have some evidence that Greece's debt is sustainable. Now everyone knows that Greece's debt is not sustainable. I think at last check it was 159% of GDP, likely to go up to 175%. They need to agree something by next month, don't they?
They do, and the real problem is the Troika says that there's this €2 billion funding gap for next year, and the IMF can't, by its own bylaws, provide any more money until Greece proves that it's got funding for the next 12 months, and it doesn't at the moment if the Troika's right about that gap. If the Greek government has to push through more wage or pension cuts, I think a lot of ministers will resign and the government will fall immediately. In fact, a number of government ministers have told me they would vote against that. So that's not really an option.
Red lines. You tweeted something about red lines. Can you expand upon that?
That's right. They've set up a bunch of red lines, that even under immense Troika pressure, they absolutely will not cross, cannot cross. They would, rather pull out of the government and see a new election instead. So they are establishing these red lines. One possible source of funding is the bank recap fund that was part of the second bailout, has about €7 billion left in it that hasn't been used. Now, they might need that after this asset quality review is done, but they might need it for next year's funding more urgently. So they might redirect some of that money. At the end of the day, the Troika's thrown a lot of money at Greece, and if the gap is only €2 billion, I think they'll come up with some kind of accounting trick or pocket of funding elsewhere to fill it for now. But there's a much bigger gap for the next couple of years, and that will continue to be a problem.
And it will probably get bigger if the economy continues to deteriorate, I'm guessing.
Yeah, absolutely. No, the Troika and the Greek government insist that Greece will grow next year. I think that's overly optimistic, and Greece will probably just contract less sharply next year.
Let's move on to Portugal. They're struggling to agree a 2014 budget because the Constitutional Court keeps saying, no, you can't do that. So what chance that they will exit their bailout next year?
Well, so the Constitutional Court in Portugal has been more obstructive than the opposition. Politicians in Portugal are at their wits' end with it. But the sentiment seems to be, when I go to Lisbon and speak with officials, that they can always get around the Constitutional Court by rewording things or tweaking things. The problem is it just takes time. And Portugal is due to exit its bailout in the middle of next year, so it doesn't have a whole lot of time to play with. I think Portugal probably will succeed in exiting its bailout, but not without help. And the question is, what form will that help take? It could just be a credit line, an ECCL, or it could end up being a full bailout. Now, the Portuguese government just today, reiterated that they're interested in an ECCL, and that would mean that they would try to fund themselves in the markets, but if they couldn't, then they could get help from official lenders from the ESM. The alternative is having a really invasive Troika-style bailout like they already have. And it's clear there would be a little bit less conditionality with just an ECCL. So that's their preference. I think that would also be the Troika's preference, not only so that they can show they have a success story, but also if Portugal can fund itself in the markets at all, everybody would prefer that. It would certainly be cheaper for the likes of Germany, which doesn't really want to be throwing more money at the weaker countries. So it will get out of its bailout, but it's going to need help.
Which brings me on to what the Eurozone would like to paint as their bailout success story. I think the Irish might have a different take on that, but they look to be on course to exit their bailout at the end of this year. Are they going to be able to do that without a credit line of their own?
Well, so that's being debated right now, within the government, whether they'll get a credit line or not. There is a good chance they could exit without a credit line for now, because Ireland's debt maturity or debt rollover schedule is really favorable. It has a war chest of cash built up, so it could make it for the next year without having any big problems. Also, investors really seem to have drunk the Kool-Aid on Ireland, and so unless something catastrophic happened in the Eurozone and that sort of through contagion hit Ireland, I think Ireland could fund itself. But the question is whether Ireland can continue to fund itself over the medium term in the markets. And with a deficit of around 7% of GDP and a debt burden of around 125% of GDP, no real opportunities for domestic demand to come back as unemployment is extremely high. 3/5 of those unemployed are long-term unemployed. So this is a real slow burner issue that's going to take a while to resolve. I think Ireland may actually need help in the future. So if that's the case, why not negotiate it now when they're not desperate for it? They've got a bit of a stronger position than when they can't fund themselves in the market and have to accept any terms given to them.
And they still need to abide by the fiscal compact. They just got a bit more time to get their deficit down. Am I right?
Yeah, that's right. So even for Ireland and Portugal, even if they get a credit line, which will have less conditionality, every country in the Eurozone is already subject to a lot of conditionality, just in terms of all these targets they have to hit, through the fiscal compact, the European semester, the macro imbalances review. So there are already a lot of conditions imposed on everyone.
Of course, that's neatly summarised what's gone on in Europe, but Europe is also facing another problem right now, and it's not really one of their making, it's the value of the euro. And the last time we spoke, I think you indicated that the euro was starting to impact on some of the weaker European countries. We've had SAP this week already suggest that the high value of the euro is impacting their profitability. So given the shenanigans in the US, obviously the euro is now at its highest levels for nearly 2 years. Draghi's in a pickle, isn't he?
He is, and unfortunately what the Eurozone really needs is a euro that's at parity with the US dollar. The chances of that happening are pretty much zero. It's not going to happen as long as everyone else is printing money and the ECB isn't. And I know the Fed has talked of taper, but that's been pushed off into the future given the government shutdown, given the reaction in the emerging markets to just the announcement of taper as well, given the debt ceiling, and given the fact that all these things are going to come back in a couple of months again. I don't think taper is going to happen for at least a few months, and that means that the euro is going to remain really overvalued.
I mean, that's one of those sort of Gordian knot scenarios that the Fed's got itself into. When they first started talking about tapering, bond yields went up, which obviously hurts smaller European countries as well as Spain and Italy. But as soon as they but the euro went down. So now they've got a higher euro, lower bond yields, or a lower euro, higher bond yields. They're in a catch-22 situation, aren't they, really, unless the ECB prints money. Now, I've heard an awful lot of people say, when push comes to shove, to keep the euro together, the ECB will print. Can you see that? Because I'm not sure I can.
No, I can't really see the ECB printing. It's against their mandate. It would require massive treaty changes. But, maybe most importantly, Germany doesn't want the ECB to just print. And I know the ECB is technically independent, but it's not really. And the only way that Mario Draghi could say that the ECB would do whatever it takes, and the only way that he could announce his bond buying program, which does involve printing, in theory, maybe if it ever gets used, was that Merkel actually supported it. And she came out immediately afterwards and said that she supported it. Now, if the ECB starts printing money through the OMT or otherwise in huge amounts, I think the German government would pull its support and the ECB wouldn't be able to continue.
Interesting. I wonder if we'll ever get to that stage. I have a feeling we might, but it may take a while.
It seems to take longer than you think.
Incremental progress in Europe appears to be the general theme. Okay. Well, once again, thank you, Megan, for coming along for our little chat. If time permits, we'll try and get you in just before Christmas. I can't imagine too much will change now. I think equity markets will probably be higher, given the fact that, as you quite rightly said, I think any tapering is off the table until then, because we have another debt ceiling saga to look forward to in the new year. I'd like to thank you for coming in. I'd like to thank you guys for listening, and we will talk to you all again in about 2 or 3 months' time. Thanks very much for listening. This is Michael and Megan talking to you from CMC Markets.